John Maynard Keynes, one of the most famous economists. He wrote a book in 1936 called The General Theory of Employment, Interest, and Money. And in it, he said, a good investment narrative can unleash animal spirits on the market, and those animal spirits will drive prices higher. And in this video, we're going to discuss what we think will be the top 4 narratives going into the next bull market and how we plan on positioning ourselves. So guys, before we start, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only. All right, so without further ado, let's get right into it, guys. So first off, is there proof that narratives drive bull markets? Well, let's just look back in the past. You have the Bitcoin halving narrative that pretty much starts a bull market every time. And this one isn't just a narrative, it has a supply and demand effect. But let's keep going. You had the metaverse narrative. Remember when Facebook announced that they were turning their name to Meta? You saw Sandbox, Decentraland, like pretty much all metaverse tokens pumped. DeFi summer, when we had Compound release their comp token, and they allowed you to essentially supply collateral onto the platform. You actually got paid in the comp token as well. And then so many projects started to copy that, and that formed into what we know today as yield farming, which I made many videos on. You had the layer 1 narrative where you had Ethereum, EOS, Cardano, like pretty much all the layer 1 narratives pumping. Guys, there are so many examples, but these are the main narratives that people in crypto know. You have NFTs too. You guys all remember the NFT narrative. So let's talk about what we think will be the top 4 narratives, not 8, 4 narratives going into the next bull market. So the first narrative we believe is going to be artificial intelligence, or AI. Did you guys know that according to PwC Global, AI is the largest megatrend of our generation, and it actually estimates that it will create $15.7 trillion in new wealth. But AI is actually facing a major hurdle to mainstream adoption, a bottleneck, so to speak, and that is lack of computational power. Fortunately, there's a solution to the GPU problem, and it actually comes from blockchain technology, believe it or not. So certain blockchain projects connect users seeking computational power to providers with excess computing power. So I think that this will lead to a major convergence of the 2 biggest technological trends of our lifetimes. So you guys just go back to 2023. It seems like AI was all anyone was talking about. You had ChatGPT. It was the fastest growing platform, fastest platform to hit 100 million users. It did it extremely fast. And AI undoubtedly was the biggest narrative of the year. And it was a huge reason why the world's biggest tech companies hit all-time highs and smaller AI stocks rallied as well. A few examples, you had Nvidia. The stock price tripled over the last year, driven by its AI hardware development. You had AMD. Its stock price went up 144% or something in the last year, again, for its AI chip development and being Nvidia's closest technology competitor. And then you even had lending company Upstart Holdings, which uses AI to make lending decisions. That shot up 508% last year as well. So I think the genie is out of the bottle at this point. I don't think the AI theme is going away. And I think that it's one of those technologies that will eat the world. Like you saw tech eating the world, we're seeing crypto eating the world. And I think AI is going to eat the world as well. And I think it's going to impact every known industry on earth, just like technology did. Proof of that is you don't trust a company without a website, even if it's a shitty one. One of the industries that it's going to impact is crypto. And I think it's going to start with AI agents. What is an AI agent? So an AI agent can basically perform a variety of tasks. For example, it can use real-time data about the weather and traffic to coordinate your travel, like, just small things like that. Or it can act as your investment advisor. It can make trades for you based on real-time market data. Like humans can't process or analyze and respond to data as quickly as AI can. And AI can think and make decisions faster in situations where speed and accuracy is of the utmost importance. That can be a customer service chat. That can be a logistics network. It can be an investment brokerage account. Like, it doesn't matter. I think AI agents are going to be open and accessible to all, not just because like for example, ChatGPT, you don't have to pay to use it. Like there are paid memberships where you can pay to have better features. But I think a big reason of it is because they want data. Like data's worth more than oil. So I think everyone's gonna be able to use it, to do it. It's software, it's cost effective, and it's an easy way for anyone to access large language models and machine learning anywhere in the world. The second narrative, and this isn't in any particular order, the second narrative we think is going to be huge in this bull market, and this I feel like is the most obvious one, is layer twos. Guys, if you look at the past bull market, you had Ethereum with extremely high gas fees, and you saw people start going to Solana and Binance Smart Chain. This is because layer ones are affected by something called the blockchain trilemma. The blockchain trilemma is a triangle. You have decentralization, security, and scalability, aka transactions per second. And you have Bitcoin, which is famously noted to be the most secure network in the world, and it's extremely decentralized, but it's not scalable. It can only handle 7 transactions per second. Same exact thing with ETH. So if you look at a blockchain has 3 main components. It has a consensus layer. Consensus says what's true. On Bitcoin, that's proof of work. On Ethereum, that's proof of stake. You have data, which is storage, and that's why you hear about these shards, these parallel blockchains that are supposed to run next to the blockchain so it can store everything. And then you have execution, which is computational finality. Right now, all 3 of those things are happening on the layer 1. Layer 2s come in because they want to take the execution and have it happen on the layer 2. And then you hear about these rollups, optimistic rollups and ZK rollups. I've made videos on both of them. These rollups are designed to roll up your transaction and compress it. And when you compress something, it makes the data smaller. It compresses it into the smallest packet of data possible. And then it submits it to the layer 1 so it can still have the security benefits, but it's not clogging up the layer 1. Let me give you some analogies on how to think about this. If you are flying from New York to San Francisco and it's only one plane, well, you have a lot of people bidding on a few amount of seats, so the price is going to go up. This is exactly what happens in gas fees. But if you have multiple planes, then there's more people that can get on and the prices will go down. So just like people are competing for a seat on the plane, blockchains are in the business of selling block space. And whatever the application is, whether it's a decentralized exchange, a NFT transaction, a borrowing and lending platform, some kind of game, if you're on the blockchain, you're competing to get inside of the next block. But blocks only come so often. Another way to think about this is you go to a restaurant. Imagine how annoying it would be every time you wanted to get a beer or order some fries or something, you have to swipe your card every time. The line will be out the door. You wouldn't be able to socialize, which is what you came there for. And it wouldn't be all around as good of an experience. And this is why they have you open a tab. You swipe your card once, you get your drinks, you get your food, and at the end, you close it all out. You pay for all the transactions at once. That's exactly what these layer 2s are designed to do. And it's supposed to help increase the transactions per second up into the thousands. Visa can handle 60,000 transactions per second. Last time I checked, ETH can only handle about 14. And that's why gas fees goes up when network activity increases. So I have a strong feeling that applications are actually going to be built on layer 2s versus being built on layer 1s. And I think retail is going to be using layer 2 protocols more than layer 1 protocols. And I think as a result of that, the prices of layer 2s are going to go up. I've already made videos on how to turn a small amount of money to a large amount of money, investing into optimism, investing into arbitrum, and investing into polygon. And I showed you my exact take profit strategies. The third narrative that we feel like is going to be huge in this next bull market is decentralized physical infrastructure, or depin for short. Guys, there's smart technologies all around us at this point. Whether it's your smartphone, smart appliance like your microwave and your stove, or your TV, or your high-tech car like a Tesla. Today, these devices are all connected to networks through the traditional internet. However, that leaves them vulnerable to malicious attacks. Blockchain networks are actually much more secure, and that's where depin comes in. This new technology connects all these smart devices to the internet through more secure blockchain networks. So at its core, we're talking about data networks that allow for economic benefits to flow to all users, not just tech companies. So if blockchain networks are more secure than traditional internet networks, it shouldn't be a surprise that businesses would eventually consider connecting physical devices and networks to a blockchain. A perfect example is IBM's pilot test of a blockchain-based food tracking network in 2018. I think the idea was to provide a system where you could actually see the entire journey of food along the supply chain. I think Walmart did this as well with their papayas a few years ago. In April 2019, Land Rover actually partnered with the IOTA Foundation to test the use of its smart wallets in the company's vehicles. How it worked was the connected cars shared real-time data on pothole locations and traffic congestion using the IOTA decentralized network, and drivers would actually earn crypto for sharing their data, which is pretty cool. I wish I knew about this back then because I would have did it. After announcing the partnership with Land Rover, IOTA actually exploded from 26 cents to $2.52 in 2021, and that was actually 869% increase, which is pretty significant. Now, these are just a few examples. There's a lot of other examples that I don't have time to cover in this video, but feel free to go on the internet and search if you don't believe me. So depin covers a wide gamut of possibilities, from car connectivity to logistics and supply chain tracking to data storage and even micropayments between connected machines and devices. All of our devices are becoming smarter. Pretty much everything is going to be connected to Wi-Fi damn near. Probably our water bottle. And it's going to tell us like, oh, you only drank this much, or this time you need to drink more. So this trend, I only expect it to continue. Lastly, according to Masari, the addressable market that depin could disrupt is $2.2 trillion, and it can scale to reach $3.5 trillion over the next 4 years. That includes sectors such as cloud, wireless, sensor, and energy networks. Lastly, dun dun dun, the last narrative, and the other ones weren't in order, but this one, we feel like this is going to be the top narrative, and this is why we saved it for last, and this is why we've been covering certain protocols in this industry. That narrative is real world assets, or RWAs. You've heard about Larry Fink, the CEO of BlackRock, talk about how excited he is for the tokenization of securities.
The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
That's real world assets. You have companies like Chainlink, which we made an in-depth video on, talking to major banks and financial institutions, even the DTCC, the Depository Trust and Clearing Corporation, which settles all the security transactions in the United States. They're helping all of them get on chain and connect. So I think real world assets is going to be, it's not sexy, but I feel like it's going to bring in the most money. So what are real world assets? It's a vague term. Real world asset tokens are basically digital tokens to represent ownership of real world assets on a blockchain. That could be stocks, that could be bonds. Like we talked about Pendle and how they're helping to bring the bond stripping industry onto the blockchain. And traditional bond stripping, you can only speculate on current yield, but Pendle allows you to speculate on future yield, which would offer a lot of institutions more ways to hedge risk and get a yield. It's just another tool on the tool belt. So the assets range from physical objects like real estate and artwork to intangibles like intellectual property and carbon credits. It can also include financial assets such as currencies, commodities, stocks, and bonds. Let's talk about some of the benefits of real world asset tokenization. The first one is liquidity. So tokenized real world assets can actually increase market liquidity for previous illiquid assets by providing globally accessible liquidity conditions via the blockchain. And real world asset tokens can be traded around the clock on secondary markets worldwide. So you have an asset like a house. Real estate isn't liquid because you have to find an appraiser, get an agent. I'm no real estate expert, but I know it's a lot of papers and it's a whole process. So you can't just wake up one day and say, I want to sell my house. Like you can wake up and say you want to sell your Bitcoin. Well, if you add tokenization to that, now you can add it to some exchange where it's liquid and you have the deed and everything attached to the NFT and you can sell it. And now you turned an illiquid asset into a liquid asset just like that. Second benefit is transparency. So representing assets on the blockchain actually creates an open ledger that anyone can use to track ownership and transactions. This reduces overall systemic risk by allowing for a more accurate determination of the amount of leverage and risk in the system. If you watched our Chainlink video, you saw us talk about how oracles could have maybe prevented the 2008 financial crisis, because let's say The 2008 financial crisis was mostly caused by mortgage-backed securities. You had different tiers of risk of mortgage packaged together in once. You had mortgages where it was a high likelihood people were going to pay it back, a medium likelihood, and a very low likelihood. And people thought by putting these together, it assessed risk. The reality is that whatever investment bank or company created these products, they probably understood the risk, but when it gets sold to a sovereign wealth fund, gets sold to a hedge fund, gets sold to another investment bank, gets sold to another hedge fund, gets sold to your mama, gets sold to your daddy, it kind of gets lost in the sauce and people don't understand the risk as much. But let's say you had an oracle attached to it that said, hey, the people, let's say for the low tier mortgage or any mortgage in the whole mortgage-backed security basket, there's an oracle attached to that person. Let's say you get notified when their credit score goes down, when they are not getting a paycheck like they normally would, indicating that they may have lost their job, when they miss a credit card payment, when they miss a car payment, when they miss a mortgage payment. And now every time these things are happening, it's updating their score so that people can properly assess the risk in real time. Because if people were able to do that, they wouldn't have just been buying and selling them like hot potatoes thinking that they were low risk. A third benefit to real world asset tokenization is accessibility. It allows the general public access to previously exclusive assets as well as fractional ownership of these assets. So let's talk about an apartment home. Let's say you want to, and you can't do this now, but in the future you will be able to. Right now, if you want to buy an apartment, you have to buy the whole thing. But let's say, like, what if you own the apartment, you don't want to sell the whole thing, you just want to sell the top floor, like the suites, or you just want to sell one floor. Well, you can have that apartment represented in an NFT, and then you can be like, okay, I'll sell this room for this much, I'll sell this room for this much, or you can give it away as a gift. And now when you give that gift to someone, they're automatically getting paid the rent payments. Fractional ownership is going to be huge because a lot of times people can't buy a whole house or a whole apartment or a whole XYZ, but they can afford it fractionally. So I feel like it'll make more people investors. So for these reasons, I feel like integrating RWAs into the digital finance industry will drive massive growth in crypto and in finance. RWAs on the blockchain will make the financial ecosystem more accessible, transparent, and liquid. And I feel like this is a significant step forward, and it'll be a huge step forward for crypto because right now, all of the collateral within these crypto protocols are crypto assets. Imagine if you had collateral you can borrow against your tokenized stock or your tokenized bonds. Treasuries are the dominant form of collateral in the world. If we have treasuries on the blockchain, well, now once the value of your crypto drops, the crypto market doesn't have to have this 90% drop, because if you're using crypto as collateral and your collateral drops, everything is just dropping at once. But if you have collateral that's representing a stock or a bond or whatever, it's going to allow the crypto market to not have these, it's not going to make it so volatile, because a huge reason why we're in this bear market has nothing to do with the fundamentals of these crypto protocols. It's corrupt, centralized actors, Sam Bankman-Fried, Celsius, things like that, but also forced selling because people were over leveraged. And if you're over leveraging and you have collateral that is stocks, it's not as risky as if your collateral is tied to the entire market. Now, guys, I know you're probably thinking like, oh, I'm going to go research all these industries, da-da-da-da. This is friend advice, not financial advice. I would say whichever one of those narratives resonates with you the most in terms of the knowledge base you already have, not how much money you think you can make, because all of them are going to offer good opportunities. Like, you're going to find 10, 20, 30, 40, 50, 100 X's in probably all four of those. Layer 2 is probably the least likely because, they've been around longer. But start with one at a time. Don't overwhelm yourself. Like, if real world assets is the one that resonates with you the most, that's the one that resonates with me because I understand and love finance. Start looking at the top real world asset protocols. Don't just spread yourself thin, spread yourself thick. Focus on one thing at a time. Even if you find just one, a lot of times all you need is one trade to move the needle on your net worth. One trade per year with a proper take profit strategy, and you just follow the plan. That's all you need. Hey, I'm taking my own advice. I feel like GameFi is going to be a huge narrative in this next bull market, but I'm not a gamer. Yeah, I used to play games growing up a little bit, but I'm not passionate about it. I'm not about to learn gaming when I feel like real world assets could be just as huge. I feel like real world assets is going to bring in more money, but I feel like GameFi could bring in more users, to be honest. it's sexier. A lot of people play games and they're already familiar with like skins and stuff. So NFTs, like it just all makes sense. And you know, I've been looking at like Illuvium. Like there are some I've been looking at, but I'm not gonna dive super deep into the GameFi world, and that's okay because I'll be able to make just as much money in something I understand. And if I understand it, that'll help me be able to better weather the storms. And if the price dips, you know, look at that as a buying opportunity maybe. Like if when you expand super wide, and I made a video on diversification, how diversified you should be depending on your situation. Definitely give that video a watch if you haven't. But the more projects you invest in, the more you have to keep track of. Investing and yield farming it can be passive income, but it's active management. Like you still have to know what the fuck is going on. Okay? Guys, if you like this kind of content and you want to get access to a flagship course that enables you to be able to spot narratives and conduct proper fundamental analysis and technical analysis so you can master your entries and your exits so that you can make a lot of money and be able to generate passive income on those assets through yield farming, which we teach on this channel, click the link in the description or visit know-it-als.xyz and book a free strategy session, and you'll talk to one of the members of our team and we'll see if it's a good fit for you. But we have everything you need to know regarding mindset, chart mastery, Web3 and DeFi fundamentals. How is this thing gonna connect with the traditional financial system, security protocol so you don't get hacked, and then intro and advanced yield farming. We go over all the strategies so you can find one that aligns with your goals and personality. And then you also get access to our buy and sell calls. Once you go through the course, you get access to myself as well as our elite team members / coaches, and just be able to talk to us, you know, on live video calls and do Q&As and, you know, help you with your strategies and things like that. So guys, with that, I like to conclude this video. I hope you got value from it. If you did, please consider subscribing. If you want to support the channel, drop a like, drop a comment, share it with a friend. Let me know what you want to cover next. And like I said, if you want to get access to what we feel like are the best projects within all of these narratives, book a strategy session. Let's chat and let's see if our program is a good fit for you. We're trying to find like-minded people who are hungry for knowledge, who are self-motivated. We're not trying to get rich overnight, but we're going to ensure that we're getting rich over the next maybe few months, definitely a few years. So with that, I thank you guys so much for tuning in. I love every single one of you, and I'll see you in the next video. Take care and trade safe.